The S&P 500 just hit the 100th percentile, and the S&P at this level has historically marked a regime inflection. Something is breaking beneath the surface and the data confirms it. Right now, the S&P 500 is at 7,600, the 100th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection. Snider says the eurodollar system is tightening and nobody sees it. The data says gold rose 1.9% today, moving against the bearish consensus. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. The commodity analyst is right and the data keeps proving it. Oil at $91.1. 164-day streak, the volatility expert is right and the data keeps proving it. VIX at 15.3. 5 days running. Snider just moved from wrong to right. Score 1 for Snider. Dollar liquidity crisis. Yield curve agrees at 0.42%. McElroy is waiting on confirmation. The narrative holds, but the data has not validated it yet. 163-day streak. Hartman is waiting on confirmation. The narrative holds, but the data has not validated it yet. 157-day streak. Gammon just moved from right to wrong. Bad stretch for Gammon for now. Investment grade spread at 74 basis points says the opposite of credit will blow out. The dollar analyst just moved from early to wrong. The dollar analyst is wrong for now. Gold at $4,561 is moving against the thesis. Score today, 3 right, 2 early, 2 wrong. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. Today's big question, is the dollar about to surge or is it topping out? Snider says the eurodollar system is tightening and nobody sees it. That is the thesis driving the debate today. It sounds right on the podcast and it is a clean narrative. But here's the problem. Gold rose 1.9% today, moving against the bearish consensus. If the data is right and the speaker is wrong, positioning changes fast. Here's what makes this interesting. The dollar index is falling while gold is rising. Those two signals should not be going in opposite directions. When they diverge like this, one of them is lying, and the resolution is usually fast. The dollar index at 99.1, 74th percentile. Gold at $4,561. 69th percentile, up 1.9% today. Bitcoin at about $69,000. 16th percentile, down 2.6% today. Bottom line, the data is pushing back against Snider. Until the signals confirm, the thesis is early. If the dollar index breaks below 99, the milkshake theory loses its legs. Right now it is at 99.1. If gold and Bitcoin both rally while the dollar holds, the liquidity thesis is wrong. The dollar index at 99.1. We'll track it daily on the scoreboard. Gold at $4,561. We'll track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 76 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points. Currently at 74 basis points. Pace is flat or improving, no urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, CFNAI flashing red. Snider says the eurodollar system is tightening and nobody sees it. The data agrees with that assessment. Phase 1 holds with 76 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here's what the ZIP level data is screaming about today. MI, days on market is spiking in Warren. Days on market in Warren moved plus 100% in 30 days, now 147 days. Buyer leverage score, 5100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. NE, days. On market is spiking in Lincoln. Days on market in Lincoln moved plus 100% in 30 days, now 151 days. Buyer leverage score, 56,100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. Orange, CA, payment burden is past the breaking point. Newport Beach, CA, median home about $2,704,000 on a about $138,000 household income. Price-to-income ratio, 19.6. When the math stops working, sellers find out before buyers do. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, is the dollar about to surge or is it topping out? Let me show you what happened the last time we were here. Bitcoin at about $69,000, the 16th percentile. Notable, but not extreme. In 2022, Bitcoin fell from 69,000 to 16,000 as the Fed tightened and crypto leverage unwound. In 2020, Bitcoin crashed 50% in March, then rallied 1,500% over 18 months. In 2018, Bitcoin dropped 84% from its peak as the speculative cycle ended. Different environments, different catalysts, but every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, the dollar index at 99.1 is in the 74th percentile. The last time both Bitcoin and the dollar index were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, Snider should be paying close attention because the clock is ticking on this pattern. Here's what the data says to do right now. Do not chase the S&P 500 here. The 100th percentile is reversal territory, not an entry point. Avoid Phoenix at 41% payment burden. That is stretch territory. Phase 1 holds. No alarms, but the runway at 76 basis points is shorter than last month. Every signal is live at analyze.builderslens.com. The podcasters give you the thesis. We give you the scoreboard. Subscribe, and I will see you tomorrow morning.